What's happened to the price of groceries? What's happened to the price of gas? What's happened to health insurance? What's happened to housing prices? What's happened to rents? What's happened in the last 2 years to mortgage payments? If you measure the deterioration in purchasing power against the basket of goods and services that you buy, not the ones that are hedonistically adjusted, or like the CPI, not ones that don't include tax, what I think you'll find is that inflation defined as the deterioration of the purchasing power of your savings and your salary relative to the basket of goods and services that you consume is increasing at a rate much closer to 7.5, perhaps even as high as 10, relative to the government's estimate of 2.6.
In a recent discussion with James Conner, legendary investor and analyst Rick Rule stresses the importance of investing in precious metals like gold and silver, particularly as the global economy is facing heightening monetary inflation and currency debasement levels. According to Rick, a respected voice in the precious metals and resource space, fiat currencies are losing their value much quicker than central banks like the U.S. Federal Reserve will have us believe. Rick puts the actual annual inflation rate in the U.S. between 7.5% and 10%, a wide margin from the Fed's 2.6% CPI data. Rick explains that the constant debasement of fiat currencies is slowly robbing Americans of their purchasing power, particularly because there is often no commensurate wage increase. This is undoubtedly one of the greatest arguments in favor of precious metal investments, particularly gold and silver, which have served the world for thousands of years in varying economic climates. Rick is extremely bullish on precious metals like gold and silver, and describes both as real money and the natural conclusion to the collapse of the global financial system. Though both metals have had a great run this year, with silver currently trading at 12-year highs, Rick expects much higher price increases after what he describes as the metal's reversion to mean. According to Rick, the market share of precious metals investments relative to all classes of savings and investment products in the U.S. market is believed to be less than half of 1%, down from a 4-decade mean market share of 2%. Rick predicts we will see a reversion to mean in no distant future as the demand for precious metals and precious metals-related investments quadruple. When this happens, Rick expects gold prices to hit $8,000 to $9,000 per ounce and silver to go well above $100 per ounce. We will present clips from Rick Rule's recent interview with Wealthian. As we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. You can also check out our other videos on gold and silver and the US and global economies. Thanks, and enjoy the video.
I think gold keeps going. Whether or not you should reduce your exposure really depends on you. I've said on your show before that I don't own gold because I think it might go through 2,700 or for that matter 3,000. I own it because I'm afraid it's going to go to 9,000 or 10,000. Will it do that in lockstep as a straight line? No. If you're a trader, if you're somebody who's afraid of volatility, if you can't afford to remain long, by all means take trading profits. That's not how or why I own gold. I own gold to maintain my purchasing power. By my measure, gold didn't start moving 3 years ago. Gold started moving in the year 2000. If you look at the 24 years that we've been through, gold has increased in price by about 8% compounded a year for 24 years. Gold has maintained my purchasing power, which is precisely why I own it. Is the pace of the escalation of the gold price picking up? Yes. And in the face of political pressures on the Fed to lower their interest rate, which is a different way of saying devalue the yield on the U.S. dollar, should gold continue to accelerate? Yes, if all other things remain equal. It's important that you remember that the decade of the 70s saw the legal decontrol of the price of gold. In the early part of that decade, gold had been price controlled, as it had been for 30 years at $35 an ounce. So part of the move that you saw in the gold price in the decade of the 1970s was the simple removal of price controls and the legalization of gold ownership by Americans. Remember that in that decade, and some of your listeners are too young to remember, that the gold price went from $35 an ounce to $850 an ounce. My suspicion is that had gold been decontrolled and Americans had been allowed to own it, that it would have begun the decade at $100 or some number like that, so that the escalation in price would have been eightfold. That's consistent with the experience that we had in the decade 2000 to 2010. The gold price escalated, if my memory serves me correctly, from $253 to some number like $1,700, a 7 or 8-fold increase in the price of gold. I'm not saying that we're going to get that dramatic a move, but let me put it differently. Let me suggest to you that the gold price in the period 2000 to 2024 hasn't moved up at all, but rather that the dollar has in fact moved down. That it takes more dollars to buy an ounce of gold, but an ounce of gold buys you the same amount of goods and services as it did in 2024. If you look at it from that metric, my suspicion is that the next 10 years will be very good for gold indeed, measured in dollar terms. Here's why. In the decade of the 70s, we alleviated the stress of debt and deficits. We alleviated the overvaluation of the U.S. dollar by devaluing the purchasing power of the U.S. dollar. By the U.S. government's own estimates, we devalued the dollar in terms of its purchasing power by 75% in the decade of the 70s. I believe that past is prologue. I believe that the dollar will buy you 75% less in goods and services in the 10 years coming relative to today. Why do I believe that? The on-balance sheet liabilities of the U.S. government are $35 trillion and counting. The off-balance sheet liabilities of the U.S. government are $100 trillion and counting. I don't believe it's physically or politically feasible to renounce things like Social Security, Medicare, Medicaid, and I don't believe that Congress is going to stop spending. So rather obviate so-called obligations to each other, entitlements, I think what we do is we inflate away the net present value of those entitlements. In other words, if you believe that you're entitled to $2,200 a month in Social Security, you'll get it. But that $2,200 will only buy $400 or $500 worth of goods and services. The constant in terms of valuation for the next 10 years is likely to be what it's been for the last 1,000 years, which is to say gold.
Since 2008, following the global financial crisis, the U.S. has engaged in aggressive monetary policies, including quantitative easing, money printing, and substantial government borrowing. While these measures help stabilize the economy in the short term, the long-term consequences are raising serious concerns. The U.S. holds a unique position as the issuer of the world's reserve currency, which gives it certain privileges, including the ability to print money and borrow more than other nations without immediate repercussions. However, history demonstrates that even the most dominant global powers face eventual economic consequences, particularly when mismanagement becomes systematic. The U.S. national debt has been growing exponentially, currently sitting at over $35 trillion, with about $2 trillion in deficit. This increase is unsustainable, especially as the U.S. is adding over $1 trillion in new debt every 100 days. Interest payments on the national debt are projected to surpass $1 trillion annually, adding immense strain to federal finances and squeezing out other spending priorities. The U.S. also has massive unfunded liabilities, including Social Security and Medicare obligations, estimated to be as high as $200 trillion. These programs face long-term shortfalls, adding another layer of fiscal uncertainty. To top it off, the U.S. has used its financial dominance as a political tool by weaponizing the U.S. dollar and sanctions. This has led countries like China and Russia to reduce their holdings of U.S. treasuries and explore alternatives to the dollar, including gold and other currencies, in a potential bid to undermine the dollar's dominance. This is why experts are bullish on not just gold, but also silver, which has performed quite remarkably in the past few days. Let's get back to Rick Rule's interview.
As you and I have discussed in prior interviews, if past is prologue, the momentum in a gold bull, in a precious metals bull market is set by gold. The first buyer is the fear buyer. And it's only after gold has established the precious metals narrative among generalist investors that silver begins to move. But when silver does begin to move, it goes further and it goes faster. Whether or not we have reached this tipping point or not is a subject open to conjecture. But the performance that we've seen thus far, the relative performance between gold and silver, has been borne out in prior bull market cycles. I am not sure why this set of circumstances occurs. I can just tell you from observing 4 prior precious metal cycles that does seem the way it performs. Perhaps when the generalist investor gets attracted to the precious metals narrative and comes down into the space, that the higher historic volatility of silver and the lower unit cost of silver attracts them. The truth is, I don't actually know the answer. That's probably a question that you should pose to a market historian like Eric Sprott, as opposed to a moneylender, a credit analyst like Rick Rule.
And in terms of performance, do you favor one over the other?
I have much more of my net worth in gold because I own it for insurance purposes. I like to make money. I don't need to make more money. And gold and silver is a more speculative asset. I have about 2.5% of my equities portfolio in silver equities, where I'm exposed to very high risk. It wouldn't surprise me to see that 2.5% of my portfolio turn into 20% of my portfolio if the performance of the silver equities mirrors the performance of silver equities in past bull markets. But at 71, I'm a little more risk averse than I was earlier in my career. And the consequence of that is that I'm personally overweighted gold because I have a desire for safety more than a desire for speculative gains. There is a fair bit of byproduct supply. And remember that although silver is denominated in US dollars, it's held around the world. The silver price in Indian rupee, or the silver price in renminbi, or the silver price in Chilean pesos is substantially higher relative to its mean than its price in US dollars, which means that there probably has been profit-taking by people who denominate themselves in other currencies. When you talk about the fact that the silver price has to take out its all-time high at 50, remember that that's a nominal all-time high. If you inflation adjust that $50, if you account for the deterioration of the purchasing power of the US dollar, my suspicion is that gold would have to take out $100, not $50, to take out its real inflation-adjusted all-time high. And I'm not saying it's going to happen, but I don't think that's price performance that's out of line. If you observe the period 1970 to 1980, the silver price went from $1.50 at the beginning of the period to $50 at the end of the period, and it was not price controlled. At least with regards to silver dollars, it wasn't forbidden for Americans to own silver. Similarly, in the period 2000 to 2010, if my memory serves me well, the price of silver escalated from $5 or $7 again to $50, a tenfold increase in the silver price. Am I suggesting that we're going to go from $35 to $350? Not necessarily. But when people set upside price targets on silver, they don't seem to take it into account history in the first instance, and they don't take into account the very, very, very small market share of precious metals relative to historic means.
Rick Rule's prediction that the manipulation of silver prices could shift from suppression to boosting reflects a broader conversation within the precious metals market about an impending market correction. His view is that large financial players who have traditionally controlled the price of silver to their advantage may eventually switch tactics once the profitability of rising prices surpasses their current methods. This theory aligns with the expectation that silver's growing industrial demand and supply constraints will make it harder to keep prices artificially low. As the US dollar continues to weaken under the pressure of rising national debt, inflation, and economic instability, many investors will likely turn to tangible assets like gold and silver. Historically, precious metals have provided a reliable hedge against inflation and currency devaluation. If this shift in demand increases significantly, the mechanisms for suppressing silver prices might break down, allowing the metal to trade more freely and reflect its true market value. Another major theory is that the global monetary system, particularly fiat currencies, may be on the verge of a collapse due to unsustainable levels of debt and excessive money printing. If such a collapse occurs, the world could turn to gold and silver, the only forms of money that have stood the test of time. Without the influence of central banks or financial institutions manipulating the market, these metals would likely experience a dramatic revaluation. This theory is driven by a loss of faith in paper currencies and the desire for assets that can preserve wealth in uncertain times. Silver's long-standing undervaluation, compared to gold, also supports these predictions. The gold-to-silver ratio is historically high, suggesting silver is much cheaper than it should be relative to gold. As these economic forces converge, silver could enter a period of significant appreciation, marking a critical point for those invested in precious metals. What do you think is the true value of gold and silver? Do you agree with Rick Rule's predictions about the end of silver price manipulation? Please share your thoughts with us in the comments section below. For more videos like this, ensure you subscribe to the channel, turn on post notifications, and check out our other videos. Thanks for watching.